infrastructure, and if you can a little bit elaborate on the idea of creating a dedicated cross-country fund for middle corridor, I think that should be also managed by professional asset managers. So do you think if that fund, for example, is created, how much capital you would be able to attract outside of this country's participants of Middle East, maybe middle corridor?
So you're asking me for a crystal ball here, but the first thing I would say is the idea of shifting risk parameters between government and investors is 100% correct. There's no question about it. Investors have fear of the unknown, and everything that you've laid out, sir, is absolutely what investors would at first look at and say, I don't know that I can do that in this specific country. And I think that goes back to rule of law, respect for capital, and everything that we were talking about earlier. The thing about pension funds, and I say this as well, knowing that Brookfield itself has its own insurance businesses that invest into our own funds. So not just do Canadian pension funds invest with us, we invest with ourselves using our insurance capital. The treatment of that capital and the amount of risk it takes and the determination of what that risk is very important for regulatory reasons, where those pensions are regulated. So pension funds, as you can imagine, cannot be investing all the time in venture capital. They just can't. Because number one, it would be irresponsible for everyone's pension to be thrown into high risk, high return type transactions. But also the regulators within their country would not allow them to do that. So the best way to actually do that is to only give them yield, and almost a yield which has been highly de-risked. You can only do that, like my colleague just said, by taking out all of that initial risk. Now, your point about having a manager administrate that is very important as well, and I'll tell you why. We're in the process of raising a private equity fund dedicated for the Middle East at Brookfield. It's off the back of everything that we've done. And actually LPs, global investors, came to us and said, well, you know what? You've invested $15 billion in this region. It seems like you know what you're doing. You have a decent track record. We've been wanting to enter. How can we enter? Can we do it with you? So the actual product, if you want to think of it that way, which was the private equity fund for the Middle East, came from global demand of people wanting to invest there, right? Now, when I say global demand, the reality is it's mainly investors in the Middle East and in Asia. And if you ask me, if you wanted to do something of the sort, where would you find the best capital to follow that? I would go back to saying it's the Middle East and Asia. And it's because those two regions are the most familiar with Central Asia. They're the ones that have a natural link historically and currently. Now, let's put this into perspective. The Middle East and Asia are two of the largest capital providers globally to begin with, outside of the Western pension market that you were alluding to before. The sovereign wealth alone in our countries is pretty significant. So as to the size and the scale, I can't answer that. But what I would say is I can imagine it would be exceptionally successful.
Thanks. I think that was a very good remark about where the capital now comes from Middle East and Asia. And I think Mr. Zakupov can share his view, given that he's executing a number of projects with the investors from the Gulf region and from just recently arrived from China. And maybe you share the appetite for risk and interest in Central Asia of these investors, and whether it's better model for them to be like a co-investor with you, kind of partially operational investor, or the fund structure that I'm not saying they're mutually exclusive. I'm just saying, like, what is your perception of this appetite from these regions, who they want to partner with?
Yeah, thank you. Thank you very much. First of all, I would agree with the previous speaker from Brookfield, and I would say yes. These are for us, Middle East and Asia. The mentality is very well understood. I think we share the same values. We think in the same way. On one hand, on the other hand, the risk appetite for Kazakhstan and for some casino project is quite tolerable, and I think they are our natural partners from capital perspective and from partnership perspective. Regarding it's in their culture and it's in their DNA. In my opinion, they like to partner with quasi-sovereign, state-owned companies. They like state-owned companies to be a part of their JV holding a minority stake. And this modus operandi has been proven successful, as mentioned earlier in my speech. We have a number of JVs which successfully operate here in Kazakhstan together with our Chinese, Asian, and Middle Eastern partners. Thank you.
Thank you, Mr. Zhakupov. Any final remarks from the participants of the panel on the topic? If not, I believe this concludes our plenary session. I think it was an interesting discussion on attracting investment into infrastructure in emerging or growth markets, so-called. We have a next panel session here in 10 minutes, but now I would like to really thank our distinguished panel for their time, for their thoughts, and for sharing that with us. Thank you.